Welcome, ladies and gentlemen, to another episode of Let's Talk About It, the Word on Real Estate. I am your co host, William Bertice, and I'm here with our other co hosts today. And we have to the left of me,
Yes, Clinton James, your local real estate broker, often imitated, never duplicated.
never.
What's going on, guys? It's Michael Dunn, CEO, Decade Financial Solutions. I'm your credit guy. You guys can follow me at Mike the Money Guy on Instagram, or follow me on Mike Dunn at on social media, Facebook.
Please do that, ladies and gentlemen. If you want to increase your credit score, follow this gentleman, Mike Dunn. And if you're looking in the process of buying a home and you need a realtor to help you find the right place for you, contact Clinton James. He's the right man for you. Now, last week or 2 weeks ago when we were here, we had a really great episode. We were talking about the top 5 ways to increase your credit score.
Yes,
Yes.
yes.
And that was, exactly what our listeners wanted to hear. We got a lot of great responses from it. And I think Mike was able to, reach and talk to some people.
Yeah. It was really informational. We had a great time. It's always one of the first steps in home ownership, and so obviously the idea is to culminate business opportunities, and definitely do that, and of course build awareness is always the next important thing. So.
And so we're going to talk about today the reason why you need to increase your credit score. And the reason why you need to increase your credit score is to purchase those big items. And one of those main big items, which all three of us can help you purchase, is that home. So today's topic is the top 10 mistakes to avoid as a first time home buyer. The top 10 ways to avoid to top 10 mistakes to avoid as a first time home buyer. Now, as a loan officer, I'm there to help people get the money right before they purchase a house. Clinton, as a realtor, he's there in the whole process from the start of you having an interest of buying a house and need a loan to the end when you get the keys.
Yes,
Mike
sir.
is there in the beginning telling you, if you don't do this, you ain't gonna get none
It's
of
not
that.
gonna happen.
It's not gonna happen. So there's certain things that we want you to do, but there's also certain things we want you to avoid
Void, yes.
doing.
This
And
is
that's
true.
what we're gonna talk about today. So and all these top 10 things that we want you to avoid doing all accumulate to all the things that come down as a loan officer, come down as a realtor, and come down as a credit repair specialist. So number one is trying to buy Gucci on a Nike budget.
No, it's not.
Now, we're not talking about, those special Nikes like the Travis Scott Jordans that
Right.
cost
Yeah.
$500, or, the special case Jordans that cost $1,000. Not those ones. We're
Or,
talking
or the
about
Back to the Future
the
Nikes.
Back to the Future,
Exactly.
yeah,
Exactly.
Marty
Right.
McFly. We're not talking about those Nikes.
Right.
We're talking about, those basic Nikes that do their job, get you on the court to play ball, help you run, work out, whatever it is that you do. We're talking about that. Shoes that cost around 100,
Yeah,
$150 or
by
Right.
so.
average.
Right.
So, but Gucci, I don't think Gucci has anything less than like $600, $700
Right.
for
Yeah, bare minimum.
their tennis
Yeah,
shoes.
bare
Pretty
minimum.
much.
And so we want to make sure is that when you buy your first house, if you can afford Gucci, cool, great, we can help you do that. But if you're a first time home buyer, we found out research finds that most people can't afford that Gucci house.
Right.
They
Yeah.
can afford the Nike house. Nike is still a great house.
Yeah.
Right.
It's not Spalding. It's not Apex. I'm not trying to clown people who wear that, but it's not that. It's still a great product. But at the same time, you may not be ready for Gucci. So the number one thing is we look at as me as a loan officer is that we look at your debt to income ratio. We look at how much income you have coming in versus how much debt is going out. Now, you can qualify at the top of the debt to income ratio. For example, the average debt to income ratio to qualify for a home is usually around 43%,
Right.
which means that 43% of your income could be used towards buying this house along with your other debt. It has to go along with your other debt. But if you're right at 43%, you have to think about, is this house a little too expensive for me? Can I afford this? Like, can I buy this house, but for the next 2 years, 5 years, that I might be eating that but ketchup and top
Right?
ramen,
Right.
Struggling.
struggling.
Honey sandwiches.
Now, if that's your choice, that's your choice. But you have to think realistically. You have
Right.
to think, what kind of lifestyle am I going to lead? Gentlemen, you want to jump in?
Yeah, and to just to touch on what you're saying, yes, it's so true because I always experience it out there in the field as a real estate professional and a real estate salesperson and as a real estate realtor. It's that when we interview people for the first time who wants to buy their first home, it's always they're looking at the things that they come to the table with, saying what they want in a home
Hmm.
and the budget that they have,
Speak on it.
never ever adds up. And and I'll say 99% of the people who are first time home buyers, they fall into that trap
Right.
of wanting to have the Gucci in on a Nike budget. But one of the things that I always it's all the technique that I usually use is this is that you never want to let them know right away or shut them down. Say no, that you can't afford it. You let them see a tangibly take them on the field. Let them see exactly what they want and how much
Hmm.
it costs.
Yes.
Because a lot of them don't. They have an idea what it costs, but they're in their minds. They're thinking they're looking at the zeros next to the budget that they have or the price, the average cost of a home out here, which
Right.
is if they spend over $100,000, they expect certain things, based upon what they actually think that price range because it's the first time they're spending that huge amount of money.
Right.
So they're thinking, okay, well, it comes with the the um, the travertine tile. It comes with the granite, the Korean countertops.
Hmm.
Yeah.
There's gold. They're
Gold
thinking,
toilets.
they're thinking that, because that's their goal and that's their dream and that's the idea they have of spending all that money.
Right.
But at the end of the day, it's an investment. Yeah, I mean, you have to kind of let them see tangibly. Okay, well, this is what you can, based upon what you want. This is
Mhm.
how much you have to spend. Now, are you willing to spend, or are you able to spend this?
Right.
So and that kind of brings them back, and then you start showing them things within their budget, their range, their price range, or their
Right.
budget. So I mean, that's always the issue, and it's something where I always taking the analogy of my experience is that sometimes you might have to go out of your location and get knockoffs, like
Yeah.
get
Go
the
down to the outlets, right?
get the Nikes
Get a
instead of
deal.
the Nikes,
Yeah, get a deal.
Right.
So yeah, the outlets, and that's where when we look at locations, sometimes you have to go out of the area. Like I mean, I was just over the last weekend, I was up in Hemet, and what you getting for $200,000 in Hemet, I was just blown away, and it's close to 200, no, 2,000 square feet,
Ooh,
Yeah.
that's nice.
for 200, around 280, so
Yeah.
these are the things that we try to translate to buyers and let them know of is because I mean we say their eyes always bigger than their pockets.
So what you're saying is, hey, listen, if you want Gucci, I can get you Gucci. However, you won't be able to go into the Gucci store and buy it. I got a homeboy hook up over here somewhere who got the real deal.
Right.
It's,
Oh,
it's the real deal, but this is where you want to buy it from.
we gotta take a little drive out,
Yeah.
to the outlet.
Yeah. You might have to go a little distance.
And,
Right.
and with your experience, Mike, in doing credit repair, how is it that talk about how the Gucci taste on a Nike budget has gotten people in a lot of trouble where they're not able to purchase that house.
Well, I mean, when you're looking at it from the credit perspective, I mean, you're thinking about, okay, the debt to income,
Mhm.
right? So what we predominantly focus on the credit side is the debt itself. What exactly are the revolving lines? Like, what do those look like? What is the buying behavior? Because at the end of the day, you guys as brokers, as officers, you're looking at this on paper and you're seeing, okay, how is my client spending money? And so one of the things that we look at from the credit perspective is, okay, how have you been managing your debts at this point? Whether it's, defaulted loans that are now in a derogatory status that need to be challenged,
Mhm.
or even if it's your revolving lines or your student loans, like what do those payments look like? What are ways that we can dial those things in to bring that ratio down so that you're not spending so much on a revolving basis, and you can actually, kind of carve out of your budget more money for your mortgage,
Right.
And so sometimes I think that clients, they they think to themselves, "Oh, well, I'm making the payment of my credit card, so it's manageable." Well, not really, because your interest rate is through the roof and you're barely scraping by to just make the minimum payment, and
Right.
you're not bringing the balance down, and so now you're putting yourself in a position where you're not able to qualify for enough home because you've been a little too irresponsible with your credit usage,
Right.
so it's something we definitely take a look at, and obviously the idea is to bring them back to you guys in tip top shape, right? So
Right.
Right.
So, all right. So let's hit on number two. So number one was Gucci on a Nike budget, and number two is leaving the store broke. Now, I want to talk about. So when I was a kid, when I was about 10 years old, I went to this fair in Sacramento, and I had about $10 left from the fair. I bought cotton candy and
yeah,
Right.
churros and
Right.
all the bad stuff I can't eat today, but the stuff then you didn't even think about it.
yeah,
Right.
And right before we left, I saw something that I wanted, and I had $10 left. And my uncle, who was with me, said, "How much does that cost?" I said, "It's $10." He said, "How much you got?" I said, "$10." he said, he said, "Nephew, don't ever go someplace and spend all your
and
money.
all your money,
Sure.
right?
Leave some available because you don't know what's going to happen when you leave." So I say that to say this: when you are purchasing a house, you're able to make the monthly payments and everything's qualifying. Great. You still want to make sure you have enough money set aside for other expenses. And when I say other expenses, I'm talking about having a reserve or have some type of money set aside when something does happen.
Exactly.
Because we always talk about the pros and cons of home ownership versus renting. And when you own it. It's your responsibility.
Right.
Yes.
You can do whatever you want to do with that house. However, with that, it also means when the toilet breaks,
Yeah.
you
Right.
got
Yeah.
to fix it.
You got to
Right.
fix it.
Something happens
Yep.
to the roof, you have to fix it.
Yes.
Uh, one of your kids decide that they want to be an artist and draws on the wall and everything, which has happened to me. In fact, at my sister's house, she just bought her house some years ago. Someone came, a little kid was there visiting, decided they wanted to do the ABCs on their wall with a marker. So she wasn't too happy about that.
Right.
But that happens.
Yeah.
Yeah.
Damages are going to happen.
It is.
And
It
you
is.
need to have money set aside for those costs.
Right.
Yeah.
So in Clinton, as you being a realtor, sometimes there's a difference between someone buying a new house and maybe setting a little bit of money aside
Right.
and someone buying a house that's a little bit older
Right.
that, it's fixed up enough for them to purchase,
Right.
but still made a little work.
Yeah, exactly. And there's for me as a realtor, being a realtor, because back in the day I used to be a retail salesperson, and my goal was to make you spend all your money when you come into the store.
Yeah. Yeah.
But being a realtor, I have to show you how to be fiscally responsible.
Mm-hmm.
Because at the end of the day, my name is not only my name on that transaction for the life of the transaction. It goes back to my reputation in the industry. Because at the end of the day, not only do we not want you to spend all your money on your home, because a lot of people, even if you have the money, as you always say, it's better to have someone use someone else's money than use all yours.
Right.
Right. You always want to leverage, and that's the real estate.
Exactly.
It's leveraging. So when you're leveraging your money, we want to make sure that you have some money set aside at least, because a lot of people come into a transaction thinking with these 100% financing programs that is out there, thinking that they don't have to have any skin in the game, which is any money.
Right.
They have good credit, they've been paying the bills, and they've been doing very well. They make the money. They don't have to have any money to actually come in, and they can buy a home with zero savings.
Mm-hmm.
Just keep in mind you have to have at least closing costs.
Yes.
Yeah.
At least closing costs. So that's why it's not. We don't want you to think that we coming into the buying a home is going to leave you broke. But at the end of the day, we want to make sure, because when you buy a home, number one, the first thing is that you're buying a home with equity in it, and that's also leverage.
Mhm.
So and that's one of the things is that as I said, if you have the money available, we want to make sure that you know what you have money set aside for emergencies.
Right.
And if you don't have that money available, we want to make sure that home is fully insured, and at least you have some equity in that home where if anything should happen, you can still be able to cover the expenses.
Right.
Yeah.
And a lot of times, when you do get a loan, as a loan officer, as a bank, we want to make sure that you have at least 6 months reserves
Right.
Yeah.
somewhere, whether it's in your checking savings or some type of retirement account,
Right.
that just in case something happens,
Right.
Yes.
you have enough money to make your mortgage payments. Because,
Right.
it's an investment on the bank side.
Exactly.
But
Exactly.
there's some loan programs that may say you need 1 month's reserves,
Right.
which means you just need to show that you can make 1 month's payment.
Yeah.
And I'm not saying that if that's what you have, that's what you have.
Right.
But if you definitely could put more to the side, put more to the side.
Right.
We're gonna hit on number 3 real quick, and then we're gonna take a quick commercial break.
So yeah, number 3, I can do all things by myself, not hiring a realtor. Now, now I can speak a lot on this here, but at the same time, hiring a realtor is so important. I mean, there's no I in real estate, and there's no I in home ownership. So it's kind of like,
Oh, yeah, that's true.
yeah. So I mean, it's kind of like when we look at people who are now, we have this new generation of they call it the share economy, or who created the share economy, where now they share all the information. Normally, before, you used to have to go to a realtor to get the information. Now everybody have created platforms where they just share information,
Yeah.
right? So it's so now you have things like Trulia, you have things like Zillow, you have things like Realtor.com, where you can find that information that you used to have to go to a realtor to get in order now to buy a home or find out where the homes are,
Right.
location wise. Now, our job has changed as real estate professionals and real estate agents, because number one, we want to make sure, and what we do is educate ourselves in the business of real estate, meaning that what we do is not only help you find a home, we also help you understand certain things that is happening in that politically, or in that community, like certain things like people might not know about ADUs that can affect where you buy a home, opportunity zones that might not affect where and why you're buying a home in that area, and why you should buy a home in that area, the school district, the changes. So those things have not it has made us more responsible in how we actually approach the business, because now there's still information that the average person might not have access to, that as a real estate professional we have access to.
Mm-hmm.
Um, so I mean, but then agency agreements. I mean, going out there and looking for a home. Let's keep in mind, you're looking at people's biggest investment. The largest amount of money somebody has ever spent is most likely on the home they live in, on the home they buy. So they want to be able to protect that investment, even if it's somebody who's looking to buy it. So that's why with being with a realtor, having an agency agreement is so important, because it protects you as a buyer. Having that realtor, and having that realtor who has the knowledge, or can actually speak on certain things that are happening in the home, because not everybody wants any and everybody walking into their home.
Right.
Yeah.
So having that realtor designation behind you, that real estate designation behind you, does help. That's why having being a realtor is so important, and that's why I have a passion about this job. So I mean, all it is we welcome all the information out there that's being shared. Yes, right now we work with some of the most educated buyers out there, and it's challenged me as a real estate agent, because sometimes they come and they say, okay, well, I saw on Zillow, Trulia, or Realtor.com that this is the price of this home,
Yes.
when that information might be delayed.
Yeah.
So the home is already sold, and with the access we have when it comes to things like the MLS, and some of the big organizations like SDR and CAR puts out and provides for us, it's a more they make sure it's more up to date, in terms of the laws, the codes, everything. They try to make sure that we have access to that.
Mhm.
So having a realtor, as I said, is very important. If anybody's looking to buy or sell a home without having a real estate professional, I would say it's kind of like you're walking into a dangerous place, very blind. It's like you
Yeah.
don't know what you're going to expect. And negotiating a real estate transaction, trust me, I'm learning something about real estate and negotiating real estate every transaction I have. So I don't know how the average person could navigate that on their own.
With no
Yeah,
experience.
with no
Yeah.
experience.
And there's
exactly.
one more thing, and just keep in mind, in doing my research, there is over 215 small transactions that happen within a real estate transaction.
Wow.
215 things happen in a real estate transaction. So if you have the time to do that, go ahead, be about it. But that's what we're paid for, is to do those 215 things and do it well.
Right.
Okay? All right.
There you go.
Yeah.
So we're going to take a quick commercial break, and we will love for you to join in and listen in again. Let's talk about it. The word on real estate.
The San Diego Police Officers Association honors Black pioneers of policing. Join us on Friday, February 14th, 2019, for a night to remember as we honor past and present San Diego area law enforcement officers of color. 2019 honorees include Jack T. Bradford, Chester B. Taylor, Dick Lewis, Octavia Parker, Michael Cash, Donna Williams, and Howard Williams. The dinner and entertainment includes Mandate recording artist Men for Christ performing live. Doors open at 6 p.m. Event starts promptly at 6:30. You can purchase your ticket on Eventbrite. Individual price $60, and for a table of 10, $550. For more details and information, you can contact San Diego BPOA at gmail.com. Hope to see you there.
Problems, saving,
Not enough.
taxes,
Too much.
retirement,
Will it happen?
investments,
Which ones are right for me?
insurance.
How will I build my legacy?
At Allen Financial Advisement, we provide solutions to your problems. Allen Financial Advisement is a full-service financial planning firm that offers financial help just where you need it. We can help make you smarter. Allen Financial Advisement provides financial advice with an educational emphasis. Get the answers by calling us at area code 858-964-2309 or visiting us on the web at ALLEN-financial.com. That's AllenFinancialAdvisement.com. We offer financial advice with an educational emphasis.
Securities and investment advisory services offered through Woodbury Financial Services, Inc., member FINRA, SIPC, and registered investment advisor Allen Financial Advisement and Woodbury Financial Services, Inc. are not affiliated.
On Saturday, June 22nd, 2019, Albertsons and Bonds presents the San Diego County Fair.
This year's theme is the Wonderful Wizard of Oz, and it will be awesome. As we celebrate the 15th Annual Gospel Festival, an all-day celebration of great gospel music on 5 different stages.
From bands, choirs, and quartets to dance, spoken word, and hip-hop, your spirit will be uplifted with the Toyota Concert Series headliners,
The incomparable, legendary Clark Sisters.
along with the Walls Group. Don't miss the 15th Annual Gospel Festival at the San Diego County Fair on Saturday, June 22nd.
With the legendary Clark Sisters and the Walls Group. For more information, go to sdfair.com. Save the date and be there because it will be
Awesome.
Welcome back to the Word on Real Estate. I'm your host, William Bertice, and I'm here with our credit specialist, Mike Dunn,
Hey.
and I'm here with our realtor extraordinaire, Mr. Clinton James.
What up? What up? What up?
So, Mike, so before we went to a break, before we hit on Mike, we were talking about the top 10 mistakes to avoid as a first-time home buyer. So number 1 was don't have a Gucci taste on a Nike budget, meaning, don't look at buying a house that's too expensive for you or that you can afford just by the skin of your teeth. Like you just only eat ketchup and toast for the rest of your life.
Yeah.
Number two was leaving the store broke, meaning, when you purchase a house, put some money set aside for expenses, some reserves to make sure that something does happen to your house that you need to fix it, or if you're without a job or things of that nature, because those things happen, you still have enough money set aside to make your monthly payments.
Right.
And number three, Clinton hit it on it when you can't do it all by yourself. You need a realtor. You need someone that understands the neighborhood, how to negotiate the deal that works for you. Because a lot of times when you do it by yourself and you've never done it before, then you might end up messing it up. And then for those who are watching via Facebook or godradio1.com, if you have questions, comments for us, please write it in the comment menu. We're able to respond on air to your question. So Mike, why don't you hit us up on number 4 for us?
All right. So number 4, top 10 mistakes to avoid is supersize me, not maximizing your credit score. As you guys know, we spent a good amount of the show last week or a couple weeks ago talking about the importance of credit and how it affects you in your loan buying process. But specifically as it relates to the first time home buyer, the two biggest things that, in my experience, that I see that dramatically impacts a client when it comes to the home buying process is one, your interest rate, and two, your loan to value. Okay. Now, just not going too deep into this, but I'm just going to give you guys like just two basic examples, right? So you take a client who has about a 625 credit score versus a client who has a 750 credit score. Both clients, by all things considered, are lendable, depending on whatever loan officer you're working with, which I'm pretty sure has had clients who are 625 and has had clients who are 750.
Mm-hmm.
If those two clients, if the 750 client goes and tries to buy, let's just say, a $200,000 house, and the same 625 client goes to try to buy that same $200,000 house, on average, over a fixed 30-year loan, just that difference in credit score is going to cost that 625 client approximately $20,000 more on their loan. Okay, so take that same house, exact same house, and just add another $20,000 on it in interest, and that's what you're looking at to pay. That's how much your credit score costs you to buy that same exact home. Okay. And so a lot of clients don't really quite understand that because most of the time clients are only just looking at the idea of, okay, well, if I can afford the payment, then why not just pay it? Well, you want to make sure, and this is what we're talking about, you want to buy smartly in making sure that you dial in your budget and consider your interest rate and how much extra you're spending. Because I would gladly take a little bit of a smaller house that's less expensive that I could maybe doctor up a little bit and make it really my own,
Right.
versus trying to stretch myself $20,000 extra to try to buy something that maybe is outside of my budget. Now, the second thing that I've noticed with the credit score and how it affects, like I said, is the loan to value. Okay, and basically what this is just how much loan the bank is willing to give you at a percentage. So taking that same $200,000 home, sometimes what banks will do is because of your credit score, they will only give you 90% or 80% or 70% loan to value because you are considered to be a higher risk of a client. So they don't want to finance 100% of your loan. Okay. And so what I see a lot of times, and this is exactly why I'm working with a client right now in this very exact situation, where her credit score is too low, or the husband and wife, their credit score is too low. And right now, with the loan to value that they are being given on the house, because they are approved for a loan, that it's not enough loan for them to qualify for the house that they want to buy, and because of their credit score. So it's unfortunate, but that's why they came to see me, because
Right.
I'm working on cleaning up their credit and getting it higher so that they can ultimately, qualify for enough loan to buy the house that they want with the amount that they have for closing.
Yeah.
Sorry.
Yeah. You want to hit on that too?
Yeah, I think Mike pretty much he's the credit professional here. So Mike pretty much hit on everything that we have to deal with, because every time we run into the situation, it's always in coordination with the loan officer and the credit repair. So a lot of times, if we're looking in the area and we didn't find what they're looking for within the price range, and basically because number one, what they're qualifying for in their mortgage payment, it's out of their budget range. We try to stick within that price range, and then if we're not find what we're looking for, maybe they might have to just tweak their credit score a little bit more to qualify for just a little bit more. So that's where we coordinate with the loan officer, and then we send them right over to Mike and say, "Hey, Mike, we work with this client. We're trying to increase their credit score. They're already been approved for this amount, but we now want to raise their credit score so that they can get a little bit more with a little bit lower rate, or the same rate with a little bit more." So, but I leave that in the hands more of the loan officer, which is you, and the credit specialist, which is Mike.
And I would say that the minimum credit score you want to have when you're purchasing a house to make sure you have the best chance to qualify for most mortgage products is at least a 680.
Okay.
If you have at least a 680 credit score, then you will qualify for most mortgage products. Now, ideally, if that's the minimum, you really want to try to maximize that to 760
Yes.
or better. If you have 760 or better, you have more options available for you,
Right.
and you have the lowest possible interest rates for you as well.
Right.
There's been times where I've worked with clients that didn't quite meet the FICO score, credit score number, and we had to do certain exceptions to get them qualified. But that also meant that there's certain loan adjustments that we had to do. Okay, instead of being able to purchase your house with 10% down, you need to put 15% down.
Right.
Yes.
You know, instead of having 6 months reserve set aside for your purchase this house, you need 12 months reserves. And so, and we're talking about a 5-point difference.
Yes.
Right. Exactly.
So before you purchase that house, I can't stress this enough. It's really important that you supersize it, supersize your fight. And this time, supersizing is good. You know,
Yeah.
so McDonald's said, supersize me. You say, I don't want to eat that much. Now you want to supersize it. You
Right.
want to maximize your FICO score. Because the highest FICO score you can get is what?
So highest FICO score is an 850.
And for those who are listening, if you didn't listen last week, talk about how quickly you can move someone's FICO score up from, let's say they're in the 500s to something that can get them qualified. Is it
Okay, so
right
using the numbers that you gave, right? 776 or 680, right? So a client who's at 500, you know, in the right scenario, depending on what's on the credit report, I mean, we can move them into a 680 within 60 to 90 days.
So, ladies and gentlemen, 2 to 3 months, you can improve your FICO score.
Yep.
Talk to Mike. He can definitely supersize you.
Yep.
Yeah.
But Mike can say, "Supersize me."
All right, number 5 is we're talking about failing shapes. Now, you remember in preschool or maybe preschool that you had that toy, and then it was shape sizes like a triangle and a rectangle and a circle and a square, and on the side there was blocks that were the same shapes, and you had to make sure you put those blocks into the right shape and then go right through. You put the wrong block in the wrong shape, and it's not going to go
It's not
through.
gonna work.
Right.
Yeah. So if you weren't able to do that in preschool, then I'm not sure if they let you pass preschool. They
I don't think so.
they need to hold you back a little bit, keep you in preschool another year to make sure you
Oh, man.
get your shapes right. So I reckon that too, not searching for the right home loan product that works for you. So if you're a first-time home buyer, you need to know which one works for you. If you're a circle, put it in the right circle. If you're a square, put it in the right square. Rectangle, octagon, hexagon,
Yeah.
all them gons, put it in the right square. So you have to make sure as a first-time home buyer for you, what shape do you fit in best with? So previous to me I work at Chase Bank now, but previous to that, I worked at BBVA Compass, and they still have it now, where they had a product where you could buy a house as a first-time home buyer, which means you have not owned a home in 3 or more years, with 100% financing. So if you're a first-time home buyer and you may have money that you can put down, which I always recommend, if you have money to put down, you need to put that down to purchase a house. But if you just want to say, okay, I'm just going to put it to the side, I'm just going to finance this whole thing, I can make this payment no problem, 100% finance is available for you. where you put no money down, you need 1 month's reserves in your checking account or savings account somewhere else. That might work for you as a first-time home buyer. Only way to qualify for that is you have to buy in the right area. So you have to buy in what they deem a moderate to low income area. Doesn't mean it's a bad area. It just means that the average income in that community is moderate to low. And then, gentlemen, please feel free to chime in too if you have anything. Next is FHA loan. Now, this is the loan product that helped me and my wife buy a house 10 or so years ago. FHA, where we put 3.5% down to purchase a house. And this is a government instituted program where the government said, hey, you know what, there's a lot of people who can qualify to purchase a house, but they just don't have enough to put down.
Yeah.
So they instituted an FHA where you put 3.5% down. You could put more. You could get a mortgage product for 30 years or 15 years. Now, the pros with that is I mentioned 3.5% down. If someone gave you the 3.5% down, then you could use it as a gift.
Right.
Yeah.
You actually, some products, depending on who you go to, you can have a credit score as low as 500 to get
Yes.
approved.
Right.
Now, again, go see Mike. Supersize it.
I don't
okay?
recommend. I don't recommend.
Don't
that.
recommend because there's so many other things that come with it.
Yes.
Right.
If you have that low of a FICO score, it's easy to refinance FHA. However, there are private mortgage insurance charges with that, regardless of how much you put down.
Mm-hmm.
It's the easiest mortgage to qualify for. And then the sellers can pay up to 6% of your closing costs too
Mm-hmm.
with an FHA. So it's a really cool product. A couple cons is the purchase price can exceed the conventional loan limit or conforming loan limit.
Mm-hmm.
So depending on your area, that you might be able to qualify for a maximum amount of $424,000.
Right.
San Diego is a little bit higher. I think it's around
Yes.
$690,000
Right.
for an FHA loan, but that's the most you can qualify for.
Right.
There's a little bit more paperwork involved with that. So if you're not a person that likes dealing with paperwork, it's a little bit more involved with that. And as I mentioned, there's mortgage insurance involved. No matter how much you put down, 3.5%, 10%, 15%.
Right.
There's always mortgage insurance involved, and the interest rates tend to be just a tad a little bit higher.
Right.
My favorite thing is conventional loan. Conventional loan is if you're able to put 20% down. There is no private mortgage insurance in there, and that can allow you to purchase the house. You can normally qualify at every home buying opportunity. If you put 20% down, there's a good chance that you'll be able to qualify for a home.
Right.
Okay, so there's something that I've been noticing here as we've been talking that I really want to stress to the audience as far as why all of this is so important and these pitfalls that you're describing, Will, that the client needs to kind of be aware of is that it really comes down to one word: experience.
Right.
Like
Right.
what, as a home buyer, a first-time home buyer, what kind of experience do I want to have in making one of the largest, if not the largest purchase
Right.
of my life?
Right.
From the credit side, the higher that score is, the better the experience will be.
Right.
From the lending side, the higher the credit, the better loan process will be for you, the better type of loan you will have.
Mm-hmm.
And you're also making the experience with your broker, Clint, easier because the type of homes that you are looking for, because he has such a thumb on the market, it's going to make it easier for you to find a home with less compromises in it.
There you
Right.
go.
Exactly.
There
Exactly.
you go.
Yeah, and I'm glad that Mike touched on that too, because experience too. It comes down to the loan professional. As we go back to the numbers, where we said you can't do it by yourself, and we had that conversation to William, that people tend to ask, why do I need a loan officer when I can apply online?
Yeah.
The question, it still goes back to number one, the experience of that loan officer is going to help you, because keep in mind there's over 98 conventional loan programs out there,
Exactly.
and then you have, and that's not talking about the government assisted programs. So when you're looking for a needle in a haystack and you don't understand these criteria and these numbers that are put out by not only the government but by the banks, Fannie Mae, Freddie Mac, this is where a loan officer comes in. He's going to fit you into the right program
That works for you.
based upon
Exactly.
what
And I'm glad you said that, because the next loan part I was talking about is VA. If you are a veteran,
Oh yeah,
Right.
baby. Shout out to my veterans.
which we have a veteran sitting here with
Yes,
us,
sir.
Oh yeah.
Mike.
Oh yeah.
Mike's a vet, and his dad's a vet too.
Yep. Veteran family, baby.
You could purchase a house with 100% financing. And remember, I mentioned the FHA loan. You have to pay private mortgage insurance.
Right.
VA, you don't have to pay it.
Yes.
And there's other benefits too. If you're 100% disabled, you're able to not pay as much in taxes, depending on what state that you live in. So there's benefits. So if you're a veteran, you need to take advantage of the VA loan.
And the lending requirements are less typically.
The lender, and so it just depends on who you go to as a lender.
Yes.
There's some people who specifically focus on VA, that FICO score doesn't have to be as high, documents is not as much. They can get you into. So if you connect with someone that has experience doing VA loans, that's the person you want to connect with. 'Cause
Yes.
they can
Right.
transition to your house in 30 days or less. Next one is a 203K loan. So that's a loan where you could purchase a house that needs some TLC, some tender loving care, and part of that loan is able to help fix that house up.
Right.
Yeah.
So if you buy a house and it's worth 180, but on the market, if it was up to date, it would be worth 240.
Right.
Then the bank will loan you the 180 and the 240 to fix it, and the difference to fix it up.
Right.
To market value. And there's also a USDA loan where if you buy a house in a rural area,
Right.
Yeah.
you could also receive 100% financing on that as well.
Yeah.
And so we touched on quite a bit, but we just want to let people to know, don't make the mistake of just saying, oh, I'm just going to get a home loan, and you don't get the loan that works best for you.
Yeah.
And if you're a VA and a veteran and you don't look at the VA option for you,
I don't know what to tell you.
I don't know what to
I don't know what to tell
you
you.
can do your homework.
It's one of the best programs in Southern California
Yeah.
right now. So.
Yeah, there's a
Gotta be
reason
done.
why VA is the most sought after.
Yeah.
So.
There's people who go into the military just for the many benefits that it brings to you, not only to serve your country, but for the benefits. So, and VA, again, the VA loan is one of them.
Yeah.
So we have a few more left that we're going to talk about on the top 10 ways to avoid mistakes as a first-time home buyer. We're going to take a quick commercial break, and when we come back, we're going to talk about the rest of those things you want to avoid. And we're here on The Word on Real Estate.
Woo! When faced with the unexpected loss of a loved one, no one can fully be prepared to know the next steps to take. The emotional toll alone is oftentimes too difficult and hard to bear. At Preferred Cremation and Burial, we're here to help and serve you. Our trusted team of professionals have one goal, and that's to provide you and your family with the very best in quality and service. We'll guide you every step of the way in making informed decisions that truly honor the memory of your loved one. Preferred Cremation and Burial is located at 6406 University Avenue in San Diego. Call our offices today at 619-584-7000 or visit our website at www.preferredcremation.org. Preferred Cremation and Burial offers excellence in service. Call us today at 619-584-7000. We're here to serve you.
Have you been in a car accident? Bill collectors hounding you? About to lose your house? Your car? If so, you need to contact the law offices of Odin and Green, San Diego's oldest African-American law firm. For over 35 years, the law offices of Odin and Green have provided quality legal services for the community. They pride themselves in giving each and every client individual attention. They are located at 701 B Street, Suite 540 in downtown San Diego. Call them now at 619 702 0800. That's 619 702 0800. At Odin and Green, experience matters. Si habla español.
On Saturday, June 22nd, 2019, Albertsons and Bonds presents the San Diego County Fair.
This year's theme is the Wonderful Wizard of Oz, and it will be Oz. As we celebrate the 15th annual Gospel Festival, an all-day celebration of great gospel music on 5 different stages.
From bands, choirs, and quartets to dance, spoken word, and hip hop, your spirit will be uplifted with the Toyota Concert Series headliners,
The incomparable, legendary Clark Sisters.
along with the Walls Group.
I don't wanna be.
Don't miss the 15th annual Gospel Festival at the San Diego County Fair on Saturday, June 22nd.
With the legendary Clark Sisters and the Walls Group. For more information, go to sdfair.com. Save the date and be there because it will be awesome.
Trying and know it's not a game. Ain't gonna lose no sleep.
Welcome back to Let's Talk About It, the Word on Real Estate. I'm your co-host, William Bertice, and we're here with...
Hey, what's going on, guys? Mike the Money Guy, CEO of Decade Financial Solutions. You guys can follow me on Instagram at Mike the Money Guy, spells like it sounds, and then you can find me at Decade Financial on Facebook.
And Clinton James, your local real estate broker and associate broker at DEM Financial and Real Estate Services.
And I'm William Bertice, your money guy. If you need money to buy a house, come see me. Now, we hit on the top 10 ways to avoid, or top 10 mistakes to avoid when you're a first-time home buyer. So number one is don't have a Gucci budget on a Nike budget, or a Gucci taste on a Nike budget. So try to avoid buying a house that's too expensive for you. Number two is leaving the store broke. When you purchase a house, put money set aside for any mishaps that will happen, because it will happen. Number three is I can do all things by myself. Hire an expert. You need to hire a realtor, credit repair specialist, a loan officer to make sure that they can help you with the process. Number four is supersize me. You want to make sure that you maximize your credit score
That's right.
Yes.
as best as possible
That's
to
right.
get the most options and the best interest rate. Number five is failing shapes. So you want to make sure that you find the right loan that works for you. If you're a veteran, use VA. If you don't have much money to put down and you're not a veteran, FHA. There's other programs available for you. You just need to be aware of those. And if you need to be aware of those, give me a call. I'm happy to help. And so we're going to hit on number 6. We have about 10 minutes left, so we're going to go through these really fast.
Yeah.
So number 6 is my money is funny. And that's not putting enough money for a down payment or putting too much money for a down payment. So we already kind of hit on this when it came to number 1 of not being able to having an incorrect budget. You just want to make sure that when you are purchasing your house that you plan it to the T where you're able to afford it that works for you. You want to make sure if you put not enough down that can maybe get you into the house, but your payments, you might be, again, making payments by the skin of your teeth. So, again, you just be eating ketchup and toast. You can't even afford mustard or relish.
Right.
You know, if you put too much down, yeah, your payments might be where you want it to be, but you may not have the reserve money set aside
Right.
that you may need. So number 6 is my money is funny. Make sure that you put the right down payment that works well for you.
Right.
Okay.
All right.
And what would you say is the right amount of down payment, the best amount of down payment somebody can come up with to put down?
Well, I always say if you could put 20% down, you're doing great.
Yeah.
I would say if you could put 20% down, do that. You don't have to put any more than that.
Right.
20% down. But also at the same time, you want to make sure you put enough down that works right for your budget.
That's right.
Meaning that you have still enough money set aside for you, and you can still afford your monthly mortgage payments.
That's right.
Number 7 is I'm not a crook. I am not a crook. Who said that?
Oh, man.
President Richard Nixon.
Okay.
Watergate.
You said president. I'm like, okay.
And what they were doing, they were trying to get some information.
Right.
And so what we're trying to tell you is that as a real estate professional, as a loan officer, as a real estate expert, as a credit expert, do not withhold information from us.
Mhm.
Don't lie to us. You know, your mama tell you, don't lie to me, boy. You
Right,
fibbing.
Right.
We're on your side. We're here to do
Yes.
what's in the
Right.
best interest for you. If Mike is sitting down with you and he's going over your credit
Right.
report,
My gosh, that is a
Exactly.
pain
we
point.
need you to be
boy.
honest about
Yes.
That's
your
right.
decision making.
Yeah.
Right.
I mean, the numbers don't lie.
That's right.
Guys, I'm looking at the credit report. I'm looking at your information that's attached to your social, your
Right.
personal data. Just tell me what happened so
Right.
we can know how to
So we can
fix
fix
it.
it.
Yeah.
So we can
And-
fix it.
And keep in mind, it's like going to the doctor. In order for us to be able to help you, we have to diagnose the situation. We
Yes,
can't
and we-
prescribe anything without knowing exactly. That's why the doctor is so meticulous in what type of medicine you're taking, and if you're lying about the medicine or what you did, or he's not going to be able to prescribe the best solution to help you. out.
Exactly.
And it also could delay your loan. We
Right.
may need some type of explanation on why this transaction happened like this.
Right.
And if you're not honest about it, instead of purchasing being in a house in 30 days or less, it may take 45 days
Yeah,
or
it
60
pushes
days.
yeah, pushes
Right.
your time
Pushes
table
the
out.
time frame
Right.
back. So don't withhold information from your credit specialist, your realtor, or your loan officer. They're there to help you. And number 8, we're going to touch on number 8 is, but no one told me that. Well, when you become an adult, sometimes you cannot use that excuse. But no one told me that. Meaning you're not looking at all the mortgage options.
Right.
So we hit on earlier the mortgage loan options that are available for you. If you use this excuse, but no one told me that. Well, you found the house that you wanted online through Redfin and Realtor and Julia. You can find the right loan products for you. And if you are not working with a loan officer that's telling you the right products that are available for you, you need to find another loan officer.
That's right.
Yes.
You need
That's
to
right.
find another loan officer.
Yep.
You need to find someone that works well with you. Number 8, because we got 7 minutes. I'm sorry, number 9, because we have 7 minutes left, is you better shop around.
Yeah.
Was Smokey Robinson sing that song?
Yeah.
Smokey Robinson and the Miracles?
And that's on every single thing. Shop around. you know,
Yes.
I'm not
so-
going to sing it because
So,
That's
because
not my gift.
I would say this. It's kind of like somebody put this analogy to me. Did you marry the first person you dated, or did you go get proposed on the first date? You
Yes.
know,
That's
that's a good
so it's kind of like that. It's like you don't want to commit to something so major in your life on not actually doing your homework and shopping around. It's a huge expense, people. So I mean, we want you to shop around. You don't have. I would love you to come with me and I do all the business for you. But at the same time, too, we might not connect. You know,
Yeah.
and doing real estate too, and helping people, you have to form a relationship. So I want you to shop around. I want you to go out there and interview other realtors and real estate professionals. But I have a guarantee. I mean, I'm sure you'll come back to me anyway. but yeah, I want you to go and shop around.
Yeah, I mean you can't stress it enough. You have to like the person you're working with. It's got to be a good fit. They got to understand your expectations. And most importantly, we as professionals have to understand our clients' expectations. And
Right.
so it's really
so
important.
true. Number 10 is cleanliness is next to godliness. It's about being organized and prepared. If you're not organized and you're unprepared when it comes to purchasing a house, that again could delay information.
Absolutely.
If Mike calls you and say, "Hey, in order for us to move forward in this trend to help you increase your credit score, I need you to sign off on this." If you're lagging, that might be the difference between increasing your FICO score from 60 days to 90 days, or from 90 days to 180 days.
I mean,
right.
well, just really quick. I know we're running close on time. I mean, when you're talking about the creditors and the bureaus and getting these rapid changes to the profile, the creditors and the bureaus, they have a legal 30 days to respond.
Mm-hmm.
So the quicker we get the information that we need and the quicker we can get it to the bureaus and the creditors, I mean, that starts that clock. So if you went to go see Clint or you went to go see Will and they're telling you, hey, we got to make these changes to, X, Y, and Z. If you push that out a week or you push that out, God forbid, 2 weeks, you literally just increase your timetable by about 45 days because you take the 30 days plus the 2 weeks. So that's why these documents, I mean, we want to move as quickly as you guys want us to move and to get you where you want to be. So it's definitely a time sensitive matter at that point.
So true. So true.
Yeah.
Yep. And on the real estate side too, this comes into, even because we do both sides, which is buyers and sellers. A lot of times we run into buyers who tend to think that their home is the best stage home based upon their perception. And in order for us to, one thing about buying, and this is just on a tip for home sellers out there, is that you always want to have a clean slate, not just cleanliness, but you want a buyer to walk into your home and see themselves living there, so that they can paint a picture, like neutral walls, very minimal stuff in their home, paint a picture of what them living there. And that I've seen all the time. That cuts down on the time frame in most homes actually selling. So that's just a tip for home buyers. I know we focus on, home sellers, but I know we focus on home buyers all the time. But this also falls into home sellers.
So don't lag, ladies and gentlemen. We need you. If you're purchasing a house, your loan officer calls you and say, "Hey, I need this document, or I need this letter." Get that to them as soon as possible.
Exactly.
Yeah. We need like a 2 to 3 hour turnaround. So we have 3 minutes left, so we're just going to review again the top 10 mistakes to avoid as a first-time home buyer. So number 1, having Gucci taste on a Nike budget. Don't buy a house that's too expensive for you, even if you can afford it, because you want to make sure you get your whole overall cost. Number 2 is leaving the store broke. Make sure that when you purchase a house, you have some money set aside for mishaps that will happen. Number 3 is I can do all things by myself. No, you can't. You need an expert with you.
Yes.
No one knows it all. There will be more that you don't know that you do know. Number 4 is supersize me. You want to make sure you maximize that FICO score. Number 5, failing shapes. If you failed shapes in preschool, you probably didn't move forward. So you want to make sure you find the right loan option that fits you. Number 6, my money is funny. Not putting enough money for your down payment. That means that, or putting too much for your down payment. Hey, you want to make sure that you budget in a way that fits right for you and your family. Number 7 is I'm not a crook, which means we're not crooks. We're not withholding information for you. So don't tell a lie. Okay, be honest. Number 8, but no one told me. Nope, don't use that excuse. We're here to help you with that answer. Number 5 is you better shop around. Don't just marry the first person you go on a date with. You want to shop around. And number 10, cleanliness is godliness. Be prepared. 30 seconds left. Where can our listeners reach you at, Mike?
Oh, you guys can find me. You can call me directly, 858-333-5559, or you can go to Instagram and find me at Mike the Money Guy, 858-333-5559.
Hey, yes, so y'all can find me. My name is Clinton James. Again, I'm a local real estate broker here in San Diego, and you can call me anytime, 619-384-9269. I'm also a notary. If you need any notary services, give me a call also.
Signing off on the Word on Real Estate. Let's talk about it. Glad you came back. See you in
Peace.
2 weeks.
See you.